We're good to go.
All right. So I'll start out with my very simple way of looking at the market to see if we should be in equities or not. Uh, just pay attention to this panel, which is relative strength of Standard and Poor's 500 to aggregate long-term bonds. And the thinner line is the actual raw numbers, and the line which changes color along the way is 5-day moving average. So as you can see, the equities are doing better. So at this point, I would say, at least at looking at this, the equities should be preferred investment. And I think Keith already mentioned that. So that is just a repeat. And as you can see, SPY as the top panel is in an uptrend right now. So in other words, some equities are favorable at the moment. The next thing I will go through is, for what it's worth, is the ranking of the sectors. I rank them using UPI, and which is a risk-adjusted return. Uh, that is this column. So the top sector right now is the communications services, and then the next one is uh, consumers. Then SPY is as a relative. I put it in there just to compare how the SPY is doing itself. So only two sectors are doing better than SPY composite. So if somebody is interested in this, one can look at the XLC and XLP and see what's in those ETFs and to pick out stocks, whatever way you use to pick them up. Next thing, uh, let me write this. Let's go back to oops. Nope. Okay. I usually report how the leverage ETFs are performing. As you know, the TQQ has been in a slump for a long time, but I'll show you that it's trying to recover. But since inception, which it started trading in 2010, the annualized return is 37% still, in spite of the drop this year. I think last drawdown was almost 69%. So on the whole, it's still doing okay if you can tolerate the drawdowns. The only thing better is the Bitcoin index, which obviously you know. Um, so 37% is actually better than pretty much all the stocks except for Tesla. Amazon has returned since its inception 30.3%, and Tesla has returned 46%. How long that will continue, we don't know. But this thing was almost close to 50% before the drop in TQQQs. Uh, so just as a reference, it is recovering. And if you look at uh, the chart itself, it did recover starting in towards the end of March, and then it stalled out again. So right now, it's not doing very much. But if you look at some of the numbers, these highlighted numbers, the year-to-date return is 59%. Uh, and annualized return here, it says 36.9% because it's a little different than what I have in the other panel. Because I think this program takes care of the holidays and the days the market is not traded a little better. So I would trust this number more. But the other number was, I think, 37%, so which is not bad, very, very close. But the thing to do is look at is year-to-date return. If you just bought it at the first of, well, December 31st, the return is 59.1%. I'm not suggesting that you should, but as a reference, it has recovered, and it is. So when people mention, this stock year-to-date is so much. Um, uh, for example, the only stock I can think of is doing better than that is Meta, which has returned 81% year to date. And that's a pretty good looking chart itself. So the bottom line is that TQQ is recovering, and I do have a small position in it, not my regular position, uh, uh, just to see because there are so many questions about the market. The interest rates are rising, and there are just so many problems. And so one cannot just sit back and invest without looking at the charts every day. Uh, let's go at look at some of the other the other as you know, I invest in leveraged ETFs instead of individual stocks. Uh, if you look at this is a relative performance, so you start out all at the same everything at as one, and then depending upon what it's doing, as you can see, biotechs are doing pretty good right now. The only thing relevant in this chart is the last 10, 20 days. So I was in GD XU, which is gold miners, and they did really well. I think I captured from here to here for about 35% or so. But as it is, my conclusion looking at the chart is that it's not going to recover. If you look at the chart itself, oops. It had a pretty good run, uh, starting somewhere around here. Uh, and right now, it is on a sell signal. Not only that, it has dropped or penetrated through the chandelier stop. So um, one should be out at this point. And It did go up today quite a bit, almost 5% from Monday, uh, but then it climbed back down. So I was doubting myself that maybe I sold it too quick, but at the end of the day, everything is good. So, um, but again, uh, one cannot invest in something like this and not pay attention to what's happening daily. Let's go back to the relative strength of some of the other, oops. So that was GDXL. So the best, in at least in this group, which are handpicked, and I'll show you how I picked those. The LABU, the biotech bull, 3 times bull, is climbing up nicely. So don't pay any attention that it's down here. All you want is to see it's going up. TQQ is this dark gray. It was going down and then it's trying to come back up. The blue one line is the um, EURL, which is a 3 times the Europe index. And that is probably the best performing um, ETF right now within the last couple of weeks or so. And it's been climbing nicely. So these two curves are kind of bunched up. Cure is the healthcare. It was doing very well, but then it started to flatten out, and now I still own it, but it will probably be sold if it keeps going down. The one thing I'm looking at right now is the SPY, and UPRO is the 3 times leveraged ETF. That might be something to look at. So at this point, I would say if you're going to put any money in the market, if I was putting money in the market, it will be EURL, the European Index, 3 times leveraged, and LABU, and probably TQs and UPRO, and of course LABU. So let's and I always report on my experiment with buy and hold. Uh, that has recovered after it's a disastrous drawdowns. Now I'm using data from Google, and sometimes it just disappears. If you look at one of the things I want to point out is buy and hold this year. If you look at only 2023, buy and hold is doing better than my switching method between TQs and SQs. The results, TQQ itself is 59% if you just held it, and somehow I'm losing it's only about 24% or so if you switched between the two of them. Yeah, I think that's why I usually do this during the market so that let's see.
Give it some time, Taljit. Sometimes if you open another file and then come back, you will show up.
Yeah. Let me try. But in any case, for TQs, the buy and hold is beating my strategy of switching between TQs and SQs. No, it's not updating. So anyway, we don't have to. Yeah, also the buy and hold the oh, actually this is updating. Remember, May 5 of 2020, I wanted to see if I can tolerate just buy and hold TQQs. And I invested $50,000 on that particular day. And right now it's up 62% from 50 to 81,000. But at one time during the bottom, it was only like 5% in almost, not quite, but almost 3 years. So the annualized return is 17.3% for me from that day, May 5th. So we will see. I'll keep reporting and see what happens. But on the whole, it's the drawdowns could be very, very tricky. This year, buy and hold is up 59%. So at this point, I have a small amount invested. Otherwise, beside this 50,000 for my regular portfolio, I'm in TQQs also, but not my regular position size, but small, because I'm concerned about lots of things. But I am invested in EURL and LABU and CURE. We'll see what happens. That's all I really had. If anybody has any questions. Yeah, this thing is gone kaput.
Welcome back. Put your
Okay,
heads
thank
down.
you.
Good job.
Thank you.
They care about none of it but climate change and rainbows.